This is the Debunking Economics Podcast with Steve Keen and Phil Dobbie.
The Archives.
Episode 373. Why are some countries poor?
We feel that the fact that there are still 1.2 billion people living in absolute poverty, which is less than $1.25 a day, is a stain on our collective conscience.
A stain?
A stain. And, you know, over the past 25 years, we've made a lot of progress. We've gone from 43% of the people living in absolute poverty to 21% today. But most of that was because China grew so rapidly.
This is the Debunking Economics Podcast with Steve Keen and Phil Dobbie.
Well, that was Jim Kong Kim, World Bank president, back in 2013 when they had the ambitious goal of ending world poverty by 2030. We are still waiting on that one. So how do we fix it? Because it's only got worse with the pandemic, then with a much higher US dollar pushing up debt for a lot of these nations. Plus, do we care as much anymore? Are we all just too selfish until we see floods of people escaping extreme poverty and washing up on our shores? Then maybe we start to care. So how do we fix world poverty? That's all. We'll look at that this week on the Debunking Economics Podcast with me and Steve Keen. Welcome along. So a week or two back in the UK, Suella Braverman, the Home Secretary, warned the UK to prepare itself for a hurricane of mass migration, a hurricane of nasty foreign people who don't integrate and come to Britain for this better standard of living. They're not getting a home. She said today the option of moving from a poorer country to a richer one is not just a dream for billions of people. It's an entirely realistic proposition. The Human Rights Act, which supports people's claims for asylum, should be renamed the Criminal Rights Act. This is true stuff. This is the way British politics has gone. Because it provides the business case for people traffickers, basically, is what she's saying. So there were some of the milder elements of her tirade, but she is right about migration, of course. Do wealthy countries face ever-rising numbers of migrants from overseas, either because of war or poverty or climate change? Mind you, Steve, I mean, if you lived in a poor country, you'd have to wonder why Britain, because if you looked at the numbers in terms of GDP per capita based on purchasing power parity, and we'll talk about that in a second, in Singapore, each person is generating 157,000 international dollars. That's how we compare countries, compared to just 80,000 in the US, 56,000 in the UK. So supposedly Singapore is 3 times as wealthy, and Britain falls below the European Union average of 57,000. So I wonder why people are looking at the UK, apart from the fact that maybe they've learned English and we all speak English. But
that's
I mean,
probably, yeah,
that's the main reason, probably, isn't it? But I mean,
well,
but I mean, most people actually don't come to the UK, of course. But I mean, I hate to side with Suella Braverman on anything at all. But it is a point, isn't it? If we have increasing disparity on the planet, climate change aside, we are going to see big movements of people.
Well, yeah, we're going to see them, and climate change is going to be the major reason why. And that's one of the many reasons why, in fact, this is basically colonialism coming back to bite the UK, and it hardly deserves to be bitten.
So let's look at the numbers then. First of all, purchasing power parity. That's why these numbers got transferred into international dollars. So how is that worked out? And is it a useful way of really measuring? I mean, no numbers are, infallible, are they? But in terms of looking at the wealth of different countries, is it a useful measure?
Oh, it's reasonable, but it's very distorted at the same time. So you're trying to basically say not just what your currency is worth in terms of American dollars, but given what it costs to buy something in American dollars, what does it cost in your country? And you then make that adjustment to the overall level of prices. And it's useful, but it's got a lot of, it can't help but distort the picture as well. So I tend, and it's very rarely collected as well in terms of you don't get at the same frequency for that you get for basic exchange rates, obviously.
It can, of course, show that there are massive divides in, I mean, if you're comparing developed countries, it's perhaps less useful. and the comparison with some countries, it just shows there's a massive gap. So you don't really care what the multitude is. So, for example, if we compare the UK at 56,000 per capita, Burundi in Africa, it's got a GDP per capita of just 891 of those international dollars.
But then you look at what it can buy, and it's much more. I mean, I've got a very trivial example of that living here in Hungary now, that what used to cost me €5 in Amsterdam cost me €2.50 here. And therefore, you've got to, they've effectively double the recorded incomes in Hungary to get a proper comparison of the income in the two countries.
Right, but I mean that's what purchasing power parity is supposed to sort out, isn't it?
That's what it does. Yeah, it is. But it's got nothing. The more you process numbers, the more you end up mangling them.
Yeah,
as well.
Of course.
So,
yeah, but I mean just the massive divide: $891 per capita versus 56,000. So the UK is 63 times richer than Burundi. Singapore is 120 times richer on that basis. I mean, however you divide the numbers, even if they're 50% out, that's a massive gap. And it didn't used to be as wide as that. That's the thing, isn't it? The rich-poor gap around the world, if you go back to the late 1700s, supposedly Western Europe and Africa, the divide was only 2.5 times. So, of course...
Yeah, well, I think that's before the Africans were introduced to European hospitality. And this is the point that people could tend to forget. The reason overwhelming reason why poor countries are poor is because they were smashed during the colonial period by their occupier, with some of the worst examples occurring in Africa, and actually Belgium probably taking first prize what it did to the Congo. So they basically destroyed the economies of those countries, and that's fundamentally when somebody destroys everything you've got, it takes a while to catch up afterwards.
Yeah, particularly if they're trying to stop that happening. So we plundered those countries for the resources and other riches, and basically now they're trying to play catch up. Is what you're saying?
Yeah, but the people often don't realize how extreme this is, and how much economic ideology was caught up in it as well. So, like my favorite example. This is one of the books which, I knew a fair bit of this anyway because I was always a relatively non-orthodox student and reader. But the best profile I've seen of what Europe did to Asia is a book by a great old historian called D.G.E. Hall, 3 initials, D.G.E. Hall, called The History of South Asia. And you look through it, and it's so meticulously documented that if you walk away from that and don't think that colonialism caused the current, but by far the major cause of the current divide, then you haven't got a brain. But he gave the example of India, and this is me. I'm going back 40, 50 years in my reading, so I might get some of the details wrong. But when before England invaded India with the East India Company, India was 70% rural and 30% urban. And the main industry, one of the major industries in the urban area, was textiles. And Indian textiles were far higher quality than English textiles, and cheaper to make as well. Then you had, at that point, the English attitude, because they were then politically controlled India through the East India Company, they banned exports of textiles from India to England. Then you had, and this is the other point where you get major divergences coming up in economies. Of course, the steam engine was perfected, not invented. It possibly was invented, but the James Watt wasn't an invention of a steam engine. It was perfection of it by improving the energy extraction capability of it, initially for coal mines. But then, of course, you attach a steam engine to a machine which turns 20 or 30 spindles when a human can only turn one. You got an incredible technological advantage for England out of the textile. They weren't as good as the Indian textile, but the damn sight cheaper. So that happened to coincide with the opening up of free trade. And then with the opening up of free trade, the urban and rural balance in India was inverted. You went from 70% urban, 30% rural to 30% urban, 70% rural, and something of the order of 100 million people. And again, I'm not sure of that particular figure, but I'm sure of the 70-30 one from DGE Hall, being starved to death. So you had a collapse of their industrial structure. And as much as people talk about free trade these days, England wasn't about to accept it until they could dominate, as they did, of course, global industry with industrialized textiles.
So isn't it the fundamental problem today that the poor countries are poor because people just aren't paid very much? Now, that sounds like completely obvious, doesn't it? But if you look at, let's go back to Burundi as an example, about 30% of their exports is tea and coffee. So they are paying themselves basically slave wages, or we are paying them slave wages, however, almost certainly multinationals involved in all of this, for us to enjoy our £5 cups of coffee in a cafe in London. If everyone in Burundi was paid, I don't know, 60 times more, for example, then it would push up the price. And every other country that was making coffee was to do the same thing, in the same way that, we've got the oil producing nations all banding together to keep the price of oil high. If we did the same for coffee, I don't think we'd stop drinking coffee. And in fact, that £5 might cost £6 instead of £5, because most of it obviously is not the cost of the coffee itself. And the country would be richer. I mean, it seems like a simple solution. Just pay everyone more. You have more of a domestic economy building up as a result of that. I mean, just how fundamental is this? Just this issue of cheap labour being the intrinsic problem in these countries.
It isn't just cheap labour; it's also the lack of the industrial infrastructure that you have to employ your cheap labour in, and this is why China was so successful. I mean, probably the most dramatic case of a country transforming itself from poverty to comparative wealth was China, and the reason it did it was the way that it did it. And I think I've mentioned a few times that I was lucky enough to go to the Shenzhen Free Trade Zone when it was still being constructed back in 81, 82, and the attitude of the Chinese. That the policy they took was they were going to let American industry come in and exploit cheap labour. They themselves were exploiting a loophole in the trade agreement that America had, which benefited third world countries. And of course, at the time, China qualified. That if you re-exported, if you sent something off for reworking and then imported it back in from a third world country, you didn't have to pay the tariff on it. So there was no tariffs involved in a multinational relocating production to China. And of course, they were going from paying, of the order of, I'm going to use just a rough note, of the order of $10 an hour to 50 cents an hour for the labor. Plus also there were, they got a whole lot of breaks in terms of environmental standards and so on. But they insisted that deal had to include a Chinese national or Chinese company becoming a 50% owner of the company after 5 years with zero capital up front. And that gives you an idea of just how gigantic the advantage was. And American capitalists were happy to hand over half the ownership of a company to get cheaper wages. That's how big the advantage was.
And yet, so China now, of course, are trying to break away from that. They're trying to give themselves a decent wage. They've well and truly
done that, yeah.
Well, I mean, yes, but their GDP per capita is less than, though going back to those international dollars, 24,000. So it's still half what it is in the UK. Now, obviously, it's a much bigger country and there's a much greater variety. So there's still people steeped in poverty. So that brings that number down. But I mean, the aim now within China is to grow its own domestic economy. So presumably they want to see that number double so that they aren't, they'll still obviously be a net exporter, but they want to see that wealth grow domestically as well. So they are buying more goods themselves. Will they get there, and are they the roadmap for poor countries?
It's got to go back to why they're getting there, and that is because they've industrialized, and with industrialization, you use more energy. And the fundamental source of that is this huge discrepancy in wealth is the amount of energy per capita. And again, back to China when I was there in 81, 82, we were taken to see a light bulb factory. And the light bulbs were, of course, classic incandescent. That was the only technology back then. But they were being hand woven. And hand assembled. Now, of course, you get a machine to do it, and once you get the machine to replicate the movements of the human that put things together, you can increase the speed of fact by 10 by a factor of 100 if you can speed up if you can increase the amount of energy being throughput through the machine. So, and then with that, you start developing better technology to do the same thing, more rapidly, higher quality, et cetera, and you get industrialization because your capacity to process energy rises dramatically. And if you go to a third world, I correspond with a person regularly in not Nigeria, pardon me, I've forgotten the actual Uganda. In Uganda, and in her village, there is no electric power, period. Okay, and that's the common situation. She's actually a nun running a training service for rural women, and I get all the stories about the situation they're in all the time. And it is literally you simply don't have the energy input in the first place. And with that, you're only doing manual labor to do various productive tasks. Saw an amazing, my wife was a great YouTube watcher, and we watched one yesterday of people, and I've forgotten which hunt it was in Africa, making motorcycles out of wood. Incredible ingenuity. But, that's rather different to going down the street and buying yourself a Kawasaki. So it's the energy capacity. And if you had to destroy that 200 years ago, you've got a lot of catching up to do.
Right. So so if the West was looking for what it could do to help developing nations, then helping to build an energy infrastructure is probably the best thing they could do. So long as they don't attach debt to it. And I know what you're going to say. Well, we don't want to use more energy on the planet because we're facing this problem with climate change. But if we did it in a sustainable way, I guess. But we're not going to do it because we want to keep ahead. And
a large part of it is reinvestment. This is the other point which I just differ with most economists on. They're obsessed about trade and specialization and comparative advantage. That is making a mockery of what capital machinery actually is. And I find this, it's so amusing when I look back and look at the history of economic thought on these issues, because the definition that economists happily use is taken from Lionel Robbins in 1933, I think it was, right in the depth of the Great Depression. He defined economics as the science, which is really wrong from the second word, the science of the allocation of scarce resources, of allocation, satisfaction of unlimited wants by scarce resources, as far as the textbooks normally quote. Next four words, which have alternative uses. Now, I'm still waiting for a neoclassical economist to explain to me the alternative uses of a blast furnace. Okay?
Yeah.
Okay, so you have to have specialized technology for all this, reinvestment, not specialization, is what matters.
Right, but I mean, you can't do any of that if you don't have power. I mean, if
you've got to have the power first of all.
And maybe the ingenuity comes from that. So, Haju Chang, you mentioned his book 23 Things They Don't Tell You About Capitalism. He's written a number of books. Actually, I'm becoming a big fan of his. We
should get him on the show one day.
We should get him on the show. If he'd come on, that would be fantastic, because he's a great talker as well.
Yeah,
and so one of the things he talks about is, this myth that people in poor countries just aren't entrepreneurial. Because
just watching that guy make a motorbike out of wood.
Exactly, that's what made me think of that. I mean, and he goes, if you go to poor countries, people have to be entrepreneurial to survive. Whatever they're doing, whether it's hawking things to tourists or shining shoes, they're not waiting for a welfare payment like people in the West are, because they don't exist. And he makes the point, whereas most people in wealthy countries work for companies implementing someone else's entrepreneurial vision.
And often they're bored shitless doing it too.
Exactly, and it's a bullshit job, as we know, for creating something that's not actually creating anything at all.
So you can't bring it back to the people, you bring it back to the machinery and the energy.
Right, so if you gave energy to these countries, if that's the stumbling block, then maybe that entrepreneurship, if you gave that person making that, that wooden motorcycle, the energy and the tools and the resources to be able to make something out of, something more sustainable, then you might have the beginning of an industry there.
Well, that's the thing. It's building up your capital stock, your infrastructure, and your energy, and that the difficulty for so many countries is that to do that they don't have the original know-how into how to make various machines. They've got to pay for the machines with foreign exchange. They end up exporting cheap products to get there. They can get as they're trying to buy expensive manufactured goods while exporting cheap agricultural goods, then they get caught in a trap and they end up in the hands of the IMF, which is run by neoclassical economists. And once they've got their fingers into you, there's no hope.
Right. Well, we'll look at that in just a second when we come back, and also just how many countries, wealthy countries, got to where they are through protectionism. I know we've covered that off a few times on this podcast, but we'll revisit it in just a second. It's the Debunking Economics podcast. It's me and Steve. Back in a moment.
This is the Debunking Economics podcast with Steve Keen and Phil Dobbie.
So, Steve, I mentioned just before the break Haju Chang and some of the examples he gives in this space. And one of my favourites was he was talking about his, during a lecture, he was talking about his 6-year-old son and how he could send his 6-year-old son out to work because, the benefit of that is he wouldn't have to pay his 6-year-old son. He'd be able to pay him or, pay for his lodgings. He would force his 6-year-old son to become more productive. A double win, basically. It's costing him less, and his son is becoming a more productive member of society at 6. But he said instead, he protects his son. He gives him shelter, gives him education, in the hope that he's going to have a more successful life. He's going to get educated. He's going to get a better job. Whereas, instead of being, at 6 shining shoes or chimney sweep, he could become a doctor or, an academic or an industry leader. And we don't do that. And yet we have a problem when governments try and do the same. So governments protect industries. Britain and the US did that. Japan has done that. Most successful nations have grown through protectionism. And yet his point, when it comes to poor nations, was saying, no, you should send your kids out at 6.
And that is the issue where neoclassical economics leads them astray. The whole focus on specialization rather than reinvestment. And this sacrificing the altar of free trade. And I can actually, I can't give the name, but I was once visited by an ex-member of the IMF who showed me the spreadsheet that they took around countries in Africa to get them to adjust their domestic policies to suit whatever program the IMF had them locked into. And he'd done it for decades, and he was embarrassed when he looked back on the damage that he'd done, because he said it didn't matter what the actual situation of the economy was. It didn't matter what their needs were. They simply had to get this spreadsheet filled out, get the numbers for it, and adjust the policies until they suited the spreadsheet. And he said, we basically destroyed, in the development programs of those countries, and we certainly wouldn't let them protect their industries.
Yeah, that's it, isn't it? Part of the if you need money from the International Monetary Fund, we want free trade as a consequence of it. And yet, if they were given that ability to protect industries, I mean, you're saying, you shouldn't be focusing on one industry, but if you're a small country, you almost have to specialize, don't you? In the same way that Japan specialized in cars a great deal.
Well, I mean, again, you look at what often happens, this is where it's important to think outside, again, the neoclassical straitjacket, is that there's not just cars, there's all sorts of different cars. There's motorbikes as well, and there weren't motorbikes, and you things like the scooter being invented and so on. So what often happened and enabled development like that to happen was that a country is too poor to pay for cars, and the bicycles weren't good enough. So I think it was Mr. Honda who was the first person in Japan to fit a 4-stroke motor, or 2-stroke motor, I think it was, to a bicycle frame, and then started perfecting that over time. And ultimately, we'll get the Honda motorbike. So the fact that we have a segmented marketplace makes it possible for countries to start developing something in their own country, which would not be saleable in the rest of the world, but which suits the domestic demand. And then as they technologically develop that, they get to the point where they are now acceptable for export, and they have cost and design advantages over the European or American rivals. And that's often how countries like Japan started to succeed.
You've got to be big enough, of course, to have a domestic market, and a wealthy enough domestic market. So if you've got a poor country like Burundi where everyone is picking coffee and tea, they're not going to have any money to buy anything at all. So how do you build up a domestic industry when there's just not that wealth within the country to support anything at all?
Well, there's one case where it's advantageous, if not trade, to have regional production systems. And of course, as you increase the scale of a factory, you reduce the per unit costs. You have higher fixed costs, but you can put more units through. So there's a certain scale at which it's feasible, for example, to have an automotive industry. And I'm again going and looking at the travesty of Australia's attempts to build an automotive industry, where they allowed at one stage 5 manufacturers inside a country with 15 million people, where the annual sales of automobiles were of the order, I think, of 250,000 automobiles per year. And that's the size of one reasonable size car factory. So you have to, if you have a too small a country physically, then you have to regionalize your production so you get to the point where you can have that scale. Yeah. And that is feasible.
The problem is you start getting into some of these countries, and the idea that you'll work with your neighbours is problematic, because there's every chance you might be at war with them,
and that often goes back to colonialism again, the Igbo versus the Yibibo. The Muslims, we're seeing this right now playing out yet again, the Muslim versus the Hindus. I won't go into talking about Israel right now, but a huge part of the divisions we see globally were caused by the colonial powers in the very first place. And England was great at divide and rule.
So even if that wasn't an issue and you were able to develop these sort of regional pacts, so poor countries work with neighboring countries and say, well, okay, let's all collectively, let's grow. We've got a population. We need to see that population grow and become wealthier. Where's the money going to come from? Almost invariably, that money is going to come from investment from overseas or loans from overseas. So that's where the loans come with that attachment for free trade, that requirement for free trade. Foreign investment obviously means you've got foreigners who are sucking out the wealth and the profits from whatever enterprise you're building. That is not the way forward for these countries.
It's a way forward, which is a trap. If you start that way, you've got to, as rapidly as possible, build up your own financial sector, your own productive capabilities. So that's again, I come back. If you wanted to do sensible stuff on development and trade, then I frequently start with the Atlas of Economic Complexity that Harvard University maintains, and their idea of the way you actually expand your productive capabilities when you have a very fragmented industrial structure is to choose industries which in a mathematical sense close to other industries. So, for example, in that sense, the car industry is close to the plastics industry and the glass industry because you need plastic and glass for a car. So if you already have plastic and glass manufacturing domestically, you've got some of the inputs to make it feasible. That's a very poor example. My favorite example is a bit of a silly one, and that's sailboarding. I don't know which country. You should look this up. Which country and which person invented a sailboard? But that's sticking a sail inside a surfboard. Now, to make it feasible, to actually turn it from a one-off idea into a manufacturing process, it helps to have both sail manufacturing and surfboard manufacturing in the original country. So what this Atlas of Economic Complexity does is work out mathematically in that sense how close is a sailboard to, and then say, okay, look for those gaps and fill those in, and that's the way to get rapid industrialization.
Right, but that's not good for these poor countries where they've scarcely got one industry. So let's go back to Burundi, where it's got coffee plantations and tea plantations. And if there was this pact with other coffee producers so that they could perhaps drive their price up. And then you had some investment, domestic investment, so that they could mechanize it, so they could produce coffee more effectively. Then you've got a country that's got a path, haven't you? If you're able to say, well, okay, we're actually going to make it cheaper for us to pick coffee. That's going to free up people. We're going to be selling coffee for a lot more, so we are, as a nation, wealthier. That gives us money, to pay welfare, but also to invest in other industries that are going to employ these people. All of a sudden, you have a path out of poverty. And if you were a foreign investor, you'd say, "Wow, you're going to sell coffee for more, and you're going to make it cheaper. I'm certainly going to invest in that." But actually, you probably don't want that to happen, do you? They'd want to make sure it was a domestic investment in their own currency, which is why I think you're saying make sure you've got the financial industry, that infrastructure there to support that. Yeah. But surely that's the path, isn't it?
That is. It's one path. It's certainly better than going for the IMF restructuring, which is almost always ends up saying you can't run a budget deficit, and therefore you slash the production of the infrastructure. Not only you slash the provisions for the poor, you slash the development of the infrastructure that might enable them to become unpoor. So yeah,
because the World Bank is saying private financing, which invariably means from outside the country. So the growth of external investors, and then so people are there just as a low cost of labour. So the whole situation just stays as it does.
Yeah, and I think size is an important issue as well, as you say, because if you have a tiny country like Burundi, then it simply doesn't have the capacity to build up the technological level needed to support an advanced civilization, unless it has. Like the weird situation of Singapore, where it was an entree port, and the international trade that passed through it was the foundation for putting industries supporting that, and then it grew in that basis. So you have to have
a regional pact. You have to have a regional trading zone, a bit like a European Union for developing nations.
Which is why the European Union was developed in many ways, because they thought they were competing against America with a population of, at the time, 200 million people and an ocean-to-ocean market, and there they were with the fragmented domestic market. So the major sensible impetus behind forming the European Union, of course, I don't think euro was sensible, but the main thing behind getting the industrial developing it as a single trading bloc was that they could then be on a comparable scale to America.
So then you take, let's look at the blueprint for the EU then. Take out, obviously, the limitation on how much debt each country can have, but you could take a lot of the rest. Like, for example, if you can self-finance and you don't need foreign direct investment, then don't have foreign direct investment, because, of course, lots of countries, lots of developed nations do have limits on foreign direct investment. So, for example, Australia's got the Foreign Investment Review Board.
Oh, so, please don't call that a limitation. That's an encouragement. I think the Foreign Investment Review Board has decided to turn down 3 or 4 investments in its lifetime. It's the greatest joke of neoclassical dominance of a bureaucracy ever, that particular institution.
Okay, well, bad example, but lots of developed nations do say, yes, we don't want foreign direct investment. So, or we're going to limit it. I don't know if it's necessarily that easy to buy up agricultural land in Australia, is it? Or is that happening all the time now?
Oh, all the time. I mean, the major, I think that some of the major cattle stations in the Northern Territory, which are larger than some European countries, are foreign owned. If you want to get a country with limitations on foreign ownership of land, then Thailand is a better example.
But most countries have, whether it's land or whether it's investment in, obviously China's got foreign direct investment limits. The US does as well in certain sectors. Certainly the UK does. So there are limitations. Burundi, though, and I suspect they've been told this, no limits on foreign ownership or limits on control of businesses within Burundi. It could be 100% foreign owned. No limits whatsoever. So that,
it is so damn small. I mean, what is the population of Burundi? You've got the numbers there.
No, I haven't actually.
It's got to be tiny. Burundi and Rwanda. But yeah, you've got. It is so small that they basically the only way they can actually survive would potentially be 11.87 million people.
I've got 12.8. So anyway, but thereabout, yeah.
That's 2020. Yeah. That is not a small, not a tiny population. I mean, you want tiny, you choose Nauru or Fiji.
Or New Zealand.
Or New Zealand. That's twice New Zealand's population. So yeah, you have, it would be feasible, but it depends upon the capacity to build, again, the energy, the infrastructure and so on that they don't currently have.
So earlier this year, 67 countries wrote to Antonio Guterres, the Secretary General of the United Nations, and to the World Bank President, Ajay Banga, calling for action to fix the widening gap between the world's richest and the world's poor. The letter said, "We know that high inequality undermines all our social and environmental goals. It corrodes our politics, destroys trust, hamstrings our collective economic prosperity, and weakens multilateralism. We also know that without a sharp reduction in inequality, the twin goals of ending poverty and preventing climate breakdown will be in clear conflict." The response from the World Bank was inequality is unacceptably high around the world today because they say the poorest people continue to bear the steepest costs of the COVID-19 pandemic and its aftermath. And the World Bank says it's committed to tackling inequality in all its forms, the path to ensure no one gets left behind. But, ironically, the World Bank might be part of the problem, mightn't it?
Well, in fact, I must say, I was knocking the IMF a moment ago. The World Bank is doing some impressive hiring of non-orthodox economists at the moment. So there's something, the World Bank has learned some lessons by the looks of things out of the last 25 years. The IMF, I think, maybe we're beyond salvation, but the World Bank seems to be waking up.
And yet they still have this preference for, private financing invariably from outside the country. So,
See, again, that comes back to international money. Well, that comes back to the international monetary system we have, because a major part of Keynes's idea for the Bancor was that what became the IMF would have been a clearinghouse for international trade. It would have been, and international trade would have required Bancors to pay for goods and services, and there was going to be an interest charge on countries running too large a trade surplus, and that was going to finance the aid to third world countries to enable them to purchase the goods they need rather than having to use their domestic domestic currency and exports to do it, they'd get it as a grant from the IMF. So, the effed up world we're in, a lot of it, again, relates back to the decision by the Americans to kick the bankroll out and put the American dollar in the primary place.
Yeah, well, that would certainly help, wouldn't it? But it is, unless these countries group together, you are going to have that problem about who pays, even if you had a roadmap out of poverty, who pays for it? Other than obviously foreign aid being given, but then a lot of that foreign aid obviously is sticking plaster stuff, isn't it?
It's worse. I mean, the foreign aid is often aid for your domestic corporations. You're trying to get extra exports for them, and you tie it up with the foreign aid. It requires you to buy goods from the country providing the foreign aid. That was when I'd worked in the overseas aid game for 3 years of the Freedom from Hunger campaign back in Australia, and that was a regular complaint of recipient nations that the donors were setting them up so they could only buy goods from the donor country. Now, to some extent, that has got a reasonable amount of justification to it, because if you are, it is actually ultimately the physical goods you need. You're getting the foreign currency to buy foreign goods. To some extent, the difficulty for the country doing that, of course, is when you do international aid, then you are using your own currency to do that. You've got to buy American dollars to do it, et cetera, et cetera. It's another impost on your balance of payments. You can neutralize that by saying, we're giving you money to buy our goods, but the goods have to be good enough. So, I have mixed feelings about that particular element of international foreign aid, but in general, it's been captured by the domestic industrial wings of most of the donor countries.
So the United Nations calls poor countries LCDs, least developed countries. They reckon there's 46 of them at the moment. So it's good that we've got an acronym for them. At least we recognise them as much as, someone's put the effort in to create an acronym. So Angola, Haiti, Cambodia, Somalia, Sudan, Tanzania, loads of them, all the countries. You could probably guess what the 46 are yourself. And many of them are steeped in external debt. That is the problem. I don't know whether there's a way you could just write off that external debt so that, and how that would be carried. But it's got worse, of course, because of COVID, and that external debt has got worse. And then, of course, a lot of that debt is in US dollars, and we're seeing the US dollar increasing in value thanks to the good work of the Federal Reserve. So none of this is good news. I mean, the answer from the United Nations has been that, they should be able to delay debt repayments, which they've done for a while, but that hasn't made the inherent problem go away. And how do they? Point on that first of all.
Well, I mean, that's Ann Pettifor was one of the main leaders of the campaign for the abolition of debt in the world's poorest 100 countries back at the Jubilee 2000 campaign. So it's been done. And like often when the debt's owed country to country, it's pretty stupid, because the country, if you owed a debt to America in American dollars, the American government can create those dollars anyway. It doesn't need to have them repaid by a third world country. So it's feasible to do that debt abolition, and that should be done. And, it's...
But most people would see that as that's an expense. They wouldn't see, it's not I know that we've talked about lots of times on this podcast how, yes, governments can create money, particularly large countries like America, and that's not really debt. But if you treat it as debt, you're issuing bonds and you're repaying that. But if it's owned by the central bank, then that's not really a repayment that you're having to factor in as a cost to the country. But most people don't think like that. So they'd say, well, if somebody owes us money and we are just writing it off, then we are worse off as a result of that. That's the conventional thinking.
And again, conventional thinking is the problem.
Mm. So we have to get over that problem before we can help the poor countries by writing off all their debt.
Or just get out of their way. I mean, this is, again, because you the comment that you've made about the ingenuity of people in third world countries, because they have to have that ingenuity, the Hydrogen Chang idea, my bloke making a wooden motorbike. That you just take away the restrictions that the West is putting on them by debt obligations and by colonial agreements and by limiting how they can actually conduct their own national development policies. And often also get rid of the crony politics that have been imposed in the same case, because that often means a large part of foreign aid money and development money goes into domestic pockets and strengthens hands of local elites who are genuinely deadly elites against the potential for people to free themselves from poverty.
Yeah, well, that's the problem as well, isn't it? So whenever you're helping yourself or helping the country, the question is, what is the political? Yeah, exactly. What's the political regime like? Because the United Nations, I mean, there is a lot of sense in amongst all the many words that have been written, and obviously there's people who spent a long time thinking about how we fix this problem. So the United Nations, when they're looking at their LCDs, they do ask the question, how do poor countries prevent themselves getting into unmanageable debt? And their advice, some of which makes sense, is that developing one of the things is developing and deepening domestic debt markets, as well as attracting foreign investments, and then managing the balance between the two. So, yeah, I mean, less foreign investment, more domestic debt would be the road to go down, wouldn't it?
Yeah, having a domestic financial system which is a servant rather than a master. That again, I mean, the one of the things that really scarred Southeast Asia was the Asian financial crisis back in 1997, and that was a huge amount of hot foreign money coming in, driving up prices of real estate in particular, building large amounts of commercial buildings, and then the whole thing collapsing. When the bubble was unsustainable, and a gigantic collapse in those economies, particularly Indonesia, also Thailand. So, yeah, you don't want hot money. You want money which, if it comes in, it's doing genuine development rather than speculating on the value of capital assets. It
feels like if this is becoming a real issue, and, if we really want to, if people like Suella Braverman, which is where we started, wants to stop, I mean, yeah, the woman is just despicable, isn't she? But if she wants to stop a hurricane of mass migration, and she wants to go right back to the root cause, and I hate this term, economic refugees, because some people, if you are completely destitute, you are going to move to wherever you can survive, because that's a bit of a human trait, isn't it? That desire to keep living. Then the answer is to get back to the root cause of all of this and make some of these countries richer. And we've talked about today some of the ways you do that, which is trying to get these countries to work together to develop a regional pact, a regional trading bloc, which the West could then say, well, okay, we are going to be, we'll help to raise the funds, but we'll also help to engineer a way where a lot of this can be funded through domestic debt rather than international debt. I mean, once there's a recognition that that is the way forwards, I mean, if it's a policy that makes sense, surely it's not inconceivable that can actually happen.
With current politics, I think it is.
Well, yeah. If Donald Trump is one of the people who's one of the world leaders, for sure.
Yeah, and Suella Braverman for that matter as well.
Yeah.
I mean,
she'll be gone next year.
What I'm bracing myself for is that people think that climate change is going to cause refugees from the third world to the West. What if the first failures of harvest occur in the Western nations? What if there's famine in Europe and famine in America? Which way is the trade going to go? And in that sense, in terms of resilience, this is something I think about because having lived in Thailand for some time and spending some time in Asia in general, the extent to which people have to be resourceful and therefore also are closer to food production, which is absolutely the vital thing you have to provide. I've got a feeling, apart from some of the enormous unnatural catastrophes that are going to occur, they are closer to the food production, more aware of how it's done, and more likely to cope with some of the catastrophes climate will throw at us. People in the West, stuck in their office buildings, in huge cities who think food is wraps itself in the supermarket in plastic. I think they're more likely to be the ones who want to emigrate somewhere than people in third world countries.
They'll be applying for their visa for Burundi any moment now.
Indeed.
Good to talk, Steve. I don't know if we've solved anything, but anyway, a useful discussion as always. Catch you next week.
Okay, bye.
The Debunking Economics Podcast.
If you've enjoyed this podcast, then please share it with your friends, like it on YouTube, and subscribe to this channel.